Hi everyone, welcome to the latest and greatest of the ABCs of VSA. I want to thank all of you for coming today. We are going to be talking today about cause and effect. And essentially what we mean by that is trading or identifying the cause and then trading its effect. Many of you have tuned in every week, and I want to thank you for your continued support and words of encouragement. Let me just tell you, for anybody that's new, a little bit about myself. I joined TradeGuider last summer, brand new to trading, never did trading before. I'm a former teacher, so part of the reason why I do a lot of PowerPoints is it's a lot easier for me to express myself on paper, and then I feel like it's better for you afterwards to learn from it. So again, I have a special guest today, Steve Phillips, who runs our trading room, futures room, and we're going to begin. So if you want to take out pen and paper, I would highly recommend it. One of the things that we're going to do today is not only show you the cause and effect, reiterate the distribution and accumulation phases that the smart money does, but also we're going to do some good bar-by-bar analysis and try and help you really understand both the overall picture and what's going on in the midst of the trade. Okay, so let's begin. All right, so here's today's objectives. We want to understand how cause and effect control the why and the when of trading. In other words, why is something happening, and then when do we trade that why? We want to be able to recognize the selling of supply during the distribution phase. We want to be able to recognize the buying of supply during the accumulation phase. Again, this is the smart money, not us herdies. And we want to be able to read the volume in order to predict trend changes. So again, we're going to understand how this cause and effect plays a role. All right? The theory of cause and effect is that for every action there is a reaction. And there's a universal theory, and the mystical law of cause and effect is that every person affects the change in their lives. So I thought this would be hilarious just to show you this little boy getting shot, and then obviously the effect afterwards is he's crying, there's a little bump on his arm, and now the Band-Aid. And whoops, and obviously this is something very silly, but at the same time, it's the whole idea that if we are, as traders and as VSA experts, trying to follow the smart money, then we need to identify their actions so then we can expect what the reaction will be. All right, so the ripple effect. If you throw a stone into the water, it creates a rippling effect. What energy and effort you exert in the universe will have a result. Now, you just need to be careful because it may not always be the result or the effect that you had expected, and this kind of made me laugh. Bob believed in the ripple effect, which was surprising given that his own ripple didn't appear to be all that effective. So again, the whole idea is that both us in the universe and the smart money is going to start to create things, and because they have such massive movement, we need to pay attention to that, and it's going to have a rippling effect in the market. We just need to figure out how long the phase is going to continue and then when to trade the effect. So trading with cause and effect. Essentially the cause is the campaign of the smart money, and it is either the accumulation or the distribution phases. Accumulation is buying and the distribution is selling. Just think accumulate, you accumulate goods, right? You're adding to your stock. Distribution, you're distributing out things, you're getting rid of things, you're disposing of things. So that's the cause. And then the effect is that volume will change, trend will change, and we want to show you how to trade with the trend. And it's very important because you will see signs and you need to know that you need to wait for the trend to happen before you enter your trade, because you need to trade with the trend. And I know we've talked about that before as well, but this is more really understanding, okay, what's my cause, what's the beginning momentum, and then the effect is the volume, the trend, and the trading. Johnny, can you hear me okay? Okay, so you're just having a visual. You might want to just check your settings and go to webinar Everyone else is able to see the screen, okay? It just might be on your side. So here's the distribution phase. What is it? It's the selling off by the smart money. When is it? It happens in a rising market. Why do they do this? So they can sell high. I'm sure you've all heard the old adage, buy low, sell high. And the whole idea is let them do that work. Let us follow after. Oh, thanks, Carl, but I think, oh, okay. It looked like he came back and then, okay. Well, if he comes back, Carl, I'll tell him what you said, so thank you. He might just be having a little bit of a video problem. So the distribution phase is essentially in a rising market, the smart money is going to start to sell. It makes more sense because they're going to do it so they can sell high or fetch the highest price. And as they sell it off one by one by one, then it creates this ultra-high volume. We also call it climactic action bars. And in the past, Gavin's called it a Yao Ming bar. I tend to call it a skyscraper. You basically see widespread bar and an ultra-high volume. It's big. You can't miss it. It's very, very big. And it's usually the start of a campaign. Now, some of those indicators that are climactic action bars are called supply coming in or buying climax. Now, I need to make a point about this. This is, I can't speak for all of you, but it is definitely the one thing that always confused me. What they mean by the term buying climax, okay, is that this is the one time in the title that they're not talking about the smart money. Okay, so what they're doing is if the smart money is selling off in a rising market, fetching the higher price, and you see widespread ultra-high volume, but you see buying climax, what that means, and if you read the description bar, the box, it means that as the smart money is selling, people start panicking or they start buying in a frenzy, thinking that the market will go up. Because you've got to remember, if the smart money is doing all of this work, then you're going to see some effort from what they're doing. You're going to continue to see rising prices. So the herd rushes in and buys. So I need to make that abundantly clear to you, okay, because this is the number one thing that is confusing. This title refers to the herd buying, creating a climax, okay? And oftentimes you might see supply coming in first, meaning that the smart money is doing a lot of selling one order after another, and then buying climax, meaning the next bar after this one, the next bar might equally have high volume. That's now the herd buying off as much as they can, okay? And if you read the dialog box, it'll explain that to you. But I just want to be very, very careful about that because oftentimes, and I had a conversation with Mike, I believe, earlier this week, the whole idea about buying and selling in the distribution phase. So that's the one thing that they're talking about. It's not meant to mislead you. It's to understand that this could create climactic action. If all these herds are buying, 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 it's basically their buying that's creating that. Okay? So I put for sale and sold so you wouldn't be confused. Distribution is selling. Okay, and I put this happy face sold because he's very happy that he bought because he thinks he's going to go long. But boy, is he in for a world of trouble. Okay. So the accumulation phase, what is it? It's the buying by the smart money. When does it happen? It happens in a falling market. They're literally accumulating, buying, collecting everything that's coming to them. Okay, why would they do this? So they can buy low. Again, let them sell high and buy low. We're going to wait for them to start, and then we'll trade the effect. It's not our job to pick a high or a low point. So how does this begin? It's a climactic action bar again. Okay, it's widespread, it's ultra-high volume. One of them that you might see is stopping volume, and you'll actually see that today in Steve's example. He'll explain that in a very clear and concise way. You might see a sign called strength coming in. You also might see selling climax. Now again, just like I said on the last one, this may sound like a misnomer. This is the selling by the herd. They start panicking when the market starts to fall. So they start selling into the greedy little grubby hands of the smart money. Gimme, 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 right? Just like a lady who has shopped way too much on her credit card. I want everything. One of my favorite characters in literature is Veruca Salt. She was the snotty little girl who wanted everything in in Charlie and the Chocolate Factory. And so she yells to her father, I want it now. I want it all. I want everything. She wants the golden ticket. So I always think about a woman like this that overspends and maxes out, right? She buys everything. And that's essentially what the herd is doing here, okay? It's the selling climax. And it refers to the herd in this case, okay? So yes, the smart money is accumulating or buying in this falling market. They want low, low prices. You'll often see stopping volume, strength coming in, or selling climax as the herd buys, 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 okay? Cornell says, hi, Lauren, do we go Christmas shopping with the personal valet? I tend to shop more online now that my family is a little bit further away. I tend to rely heavily on online shopping. But yes, I've been known once or twice to take a cab home because I've had too many packages, especially if I go to New York City or Montreal. Both are very, very fun places to shop. So, okay, so those are the two phases, and those essentially are the campaigns that you're looking for, okay? Either the distribution phase or the accumulation phase, okay? So here's a cause and effect case study. We have our climactic action here, all right? Essentially those bars, widespread, ultra high volume, okay? In my case that I'm going to talk about, Steve's going to do the accumulation phase, I'm going to do the distribution phase. So here we have the distribution phase, okay? And so again, we know by the distribution phase that it's the selling off by the smart money into rising prices, right? That's essentially what this is. What they're doing is they're checking how much demand for higher prices before bringing the market down. So the market in the beginning is going to have higher volume as the price rises. This is when they first start selling off to the herd. As the orders come in, it creates higher volume. You want to watch that volume. It could stay high as it keeps continuing to rise. It's when it starts to wane, when the demand for higher prices starts to go away, that's when you know that they're ready to bring the market down. What that means is they're done selling. Most of the volume that we track is done by them. I can't say 100% of the volume bar is 100% smart money, maybe 80%. I mean, please don't check my exact percentage, but the majority of the bar is done by them. So when you see low volume or no volume, you're basically watching for them to be done with their selling, okay? So how much selling is, or how much distributing is done by volume? And Fiona asks, they do it bit by bit. And yes, so for example, they could start selling on the climactic action, and they could rise the price, and then they could bring it down a little bit, and then they could go up again. And you want to be very cognizant of the volume. Okay, you will see oftentimes an upthrust, which is basically pushing up into an old area or pushing up into new fresh ground, but closing on the low. Essentially take your left hand and make an L. So it pushes up and then falls down on no demand basically. But you got to be careful with an upthrust because oftentimes it takes so much effort, like we talked about, there's so much effort, they're looking for a result and they're trying to trap people to go long. And so there's usually still some volume left. So it's not usually a good idea to short on the upthrust. You're looking for no demands. You may see, just like tests, you may see no demands more than once, and I'm going to show you an example of that. What you're looking for is lower volume, and you're looking for the trend to be in your favor. Okay? So you start to see this, and then what happens is you see a change in volume, you start to see a change in trend, and then you're going to take the short trade. Okay, so again, we have a climactic action, a lot of volume as the selling starts coming in one after another. You're going to see it in rising prices because they want to fetch the highest price for their stock or instrument. And this is known as the distribution phase. Okay, climactic action bars could be supply coming in. It could be buying climax by the herd. It could be weakness has appeared. And then you're going to start to check for how much demand for higher prices there are. So if the price goes up and the volume goes down, that is counterintuitive, right? That means as price goes up, they're not interested in those higher prices. And that's what you need to watch for. So Diane asks, how does the smart money force the price down? Excellent question, Diane. Imagine for a second that you had 100 candy bars and everybody wanted them. but you didn't sell them off all at once. Maybe you sold 75 off, creating a very, very large up bar and a lot of activity. You were really busy. And then the next day, people found out that you were selling these extraordinary, delicious candy bars, and they started buying them from you. So again, you may not have been involved in day two, but everyone buying your stuff was. So that's where the buying climax comes in. So again, you could have 2 days of very high volume. Now, as you start to run out of candy bars, people still think you have more. And it's not until they continue to buy a little higher, and you start running out of your supply left to sell that you finally reach some sort of apex. And at one point, you essentially are doing like false advertising, and you're like, I got 2 candy bars left. And people are like, yeah, I'm not interested. So at that point, as the price rises and the demand for what you have for those higher prices goes away, that is the point where you actually want to turn over. Lamont makes an excellent point, like the momentum is still in effect. It is. I always make the correlation of football because it's absolutely psychologically proven that the momentum shift in a game, as soon as the public attending the game starts to get louder and noisier and supporting the team, if the team can turn it around, there's a huge momentum effect from that. And so imagine a car going uphill at 60 miles an hour. Even after it runs out of gas, it'll still continue going uphill before it slides back down the hill. So again, you're going to see a little bit more of a push-up, usually in an up thrust, and then it sort of slides back down. So you got to watch the volume, because the volume is what's going to tell you when they're done selling. So just like that climactic action bar tells you when they're starting, the lower volume is going to tell you when they're done. So essentially ask yourself, do I have a change in volume? Do I have a start of a change in trend? And if I do, and all of this has happened, and I see something like a no demand on low volume, and I'm starting to be in a lower trend, I can take the short trade. Okay? So here is the JP Morgan, the hourly chart. And you'll notice that this is the end of October. Okay? Now, I hope you guys can see this pretty well, but this is point A. This is point B. This is C. There is a red indicator there. Sometimes when it's hidden behind the high or the low, you can't see it. But if you just click on your crosshairs on the body of the bar, the answer will appear down here. So you don't necessarily need to click on the arrow to get, you can just find out what that bar is. And then here we have weakness D, weakness E, weakness F. I guess I fudged here. I guess that's G and H. I don't know where the H went, so, but here's G and H weakness, and then here's I and J weakness. Okay, so A through J are all your weaknesses. So if we start here on A, okay, we basically are in an uptrend, all right, and we have a no demand bar. Okay, no demand has volume lower than the previous two. But essentially I'm showing you this because by the time I end up hitting this spike, this is a higher spike in volume relative to the last bars. Look at behind us, okay? I know this bar is coming. We'll explain that in a second. But right here, if you haven't gotten, you're on the end of the 26th of October, all right? This is the highest volume you've seen since here, okay? And B appears. And B is potential, B here is potential selling climax, all right? And you notice C is a huge gap up bar, way up, closing on the low, ultra, ultra high volume, massive spread. And then we have D and E on lower volume. And we have F, again, lower volume. G and H, this is when our volume starts to go down, and notice our trend starts to change. And I and J are in a downtrend, full-on downtrend, and we have much lower volume, okay? So B right here is the potential buying climax. Again, this is what I mean by, this is the part that's a little bit confusing. The buying in this case refers to the smart, not the smart money, to the herd. This refers to them buying thinking that the prices are going to rise, okay? This is them with their buying frenzy. So basically, weakness is in the background, A, which is why I showed it. This is a no demand, lower volume, okay? Now notice the volume is higher than A. It's an up bar, Weakness appears on an up bar, guys, right? I know you guys all know that. Weakness appears on an up bar. Again, it has higher volume than A. Now, the only problem with this bar is, if you read through the dialog box on potential buying climax, is that the next bar closes up, and it's supposed to close down in order to confirm this failure. So the first thing I did was I asked myself, why is C so massive? Can anyone think, and I put a hint right here, what is going on October 27th with JP Morgan? Why would it, look at this huge gap. This is a big gap, literally. Big gap up, push up, close on the low, ultra, ultra high volume, the highest you see for miles around. And what do you think it is? Michael's got it, Robert's got it, Steve's got it, Derek's got it. Jack, actually, that's not for another couple of days, but you're on the right track. Sam, William, Larry, yep, okay. So bar C is an up thrust. Remember, up thrust is pushing up into new ground, closing on the low. So October 27, 2011, JP Morgan achieves its highest ranking in Global Investor ISF 2011 Equity Survey. JP Morgan Worldwide Securities Services today announced that it achieved its best ranking to date in the 2011 Equity Lending Survey conducted by Global Investor ISF magazine. Let's all give them a round of applause. Good for them. So we end up with this massive, massive volume bar. And we end up with this massive, massive price action bar that goes up, up, up and away, and then closes on the low, meaning it failed. All that effort failed. Except one thing. You got to remember, we had weakness in the background. We had B behind us and we had A behind us. So all is not lost. This is a good example of how an upthrust happens on news. Okay? Terry, I'm not sure why you can't see my slides. You might want to just right-click on your settings. I think there's an orange bar that you want to click on. It just has to do with your audio and visual. Okay? All right, so back to this. So we have B, and we have the potential of a rising market. Okay, we have weakness in the background. And ordinarily, you'd be concerned that this next bar was up. But because it's so far up, so much volume, and then what do you know? We get a sign of weakness on it. We basically get the up thrust. You never trade off of an up thrust. You're like, okay, let me pay attention to that. All right, now look what happens. See the rising market? This is our distribution phase. We're selling here. We're selling here. We try and approach this top right here, but it fails, right? We're on lower volume. Here's some lower volume here. But remember, you're not going to trade in an uptrend. Let them do the selling in the uptrend. You wait for confirmation, okay? We're still basically in the causal campaign. We're still in our distribution phase, okay? Kind of whipsaws right here. These look almost closing even. Goes down, comes up, goes down, comes up. This is another no demand. Look, volume lower. Now, here's the thing I love about F. Notice that F is lower volume than D and E, right? We're on our way, kids. We're on our way. Almost at the end. This is what I love about it. Then you go sideways, sideways, down, up, way down. Here's a gap down. And then this is, this pops up on Trade Guider. This is a blue triangle. It is blue. I didn't change the color. And it's a trend reversal confirmation. I wouldn't bank the farm on this. I wouldn't bet the farm on this and trade off of that. But it can be very helpful when you're trying to determine things. Again, I wouldn't try and trade off of that. But we do start to have a trend reversal on this bar right here. Okay? And it goes down, and then it goes down again. And it tries to come up. These are both no demand bars, but notice the volume is lower. Okay? We've now mushroomed over. We start our downtrend, and we go down here. Okay? You could go in here. You could also wait for more confirmation, and what do you know? You get no demand, and then you get another no demand, finally on very low volume. So 2 bars after, when you finally get your confirmation, you see the no demand, wait for it to mushroom over, here or here are perfectly acceptable. The volume is low enough that you know that the supply has basically dried up. Okay? Let's see if I can answer a couple questions. Steve, I hope that helped answer your question. Let's see. Where should you sell your long position on this chart? Oh, well, that's a really good, that's a very good question. So are you saying, Suraj, that way back here you were in, let's say you were riding this whole uptrend? Yeah, Adam, exactly. I'm just going to assume you didn't write back. So if you're, let's say, already in this long trend and you're basically buying and you're trending and you're trending and you're trending, as soon as you see this up bar, as soon as you see an upthrust, that's usually a good time for you to get out. Also, if you're in a downtrend and you see a shakeout, that's usually a good time for you to get out, because an upthrust that fails, in order to confirm an upthrust, the next bar after it must be down, and you can't predict how much further it's going to go up again before it collapses. It often doesn't collapse on the very next bar, but since this was such an ultra-high volume and it was a news event, I would be very weary that the prices would continue to rise up. But if I was in a long trend, I would probably get out here, right around here, because upthrusts, use them to exit, don't use them to enter. I hope that helps you. Let's see. What about the bar at the high? Higher volume that closes lower with decreasing volume before. Keith, which bar are you talking about? Can you identify the date for me? Red bar at the high. Here? Okay. And so your question is, in terms of getting out at that point. Yeah, the other thing too, watch this. If you're in a long trade here, right, notice the volume. That's when you need to be careful. As the volume, see, there's still a lot of volume here, so you could potentially still stay in because they still need to move the price up. They're still selling off whatever they traded here. This is, you gotta, if you were to take this anomaly out, truthfully, right here, there's a lot of volume, bigger than you've had before, and it's a sign of weakness. You end up getting this like crazy, crazy, crazy bar. But there's still a lot of volume here, partly from the effects of this, the after effect of that, and also from here too. So as the volume goes lower, that's where you would be careful. That's where you would want to exit your trade, okay? All right, so G and H, I didn't label them here, but this is essentially G and H right here, okay? Now, I basically would have entered my trade after this, okay? I have the start, I come down here, I would close a tick below there, all right, and I marked it here for you. This is one entry that you could do. You could wait for absolute confirmation here, but if you wanted to be aggressive, you could do it here. And if you took this trade, you would still be in it right now. It hasn't gone anywhere near this. I put this resistance line because back here when I first saw the no demand on A, it was grinding right up at that level, and I had put that there, and sure enough, it went up and went up and went up, and then it came down to here, pushed off of that, but closed right here. It's not until it finally gaps down that it actually pushes through this. So I had this, I just want you to know that this number was not from right here, but obviously numbers tend to repeat themselves, but this was from way back when I first saw my no demand A bar. And so here, if you would put it in, this is basically one tick below this, okay? This would have brought you in the trade, and you'd still be in the trade now. Okay, let's see. The next bar to the last red signal is no demand. These are both no demands, okay? And we're on lower volume. And just so you guys know, this pink color, purple color, whatever, means that the volume is lower than the previous two, and two pinks in a row means the volume is now lower than this one, which is lower than the previous two. So they're both lower than the previous two, okay? Jackie asks, how would you know that the bar before the upthrust was preceding a sell-off? You wouldn't. So you would never trade off of that. The original bar B was basically potential buying climax, and if that earnings report hadn't come out, most of the time what you would see is that the next bar would close down, confirming that. And instead, it skyrocketed up and gapped up on a major news event. So again, you wouldn't trade off of either one of them. The whole idea about potential buying climax is that it's the start of the cause or the campaign. It's sort of your moment to pay attention. Oh, wow, look at that anomaly in volume. Let me wait and let me see. And then You're talking about here. So you're in the downtrend here, and if you entered here, this is a gap down. And this is a sign of strength. It's basically, this is often what happens. You have a down bar, 2 down bars, the next bar closes up to confirm it, but you're in an overall downtrend here. All right, so why enter there? Here's your cause, the distribution phase. You have a series of weak bars on lower volume. G and H are no demand on much lower volume. And the trend begins to change, which is your effect. So if you have the selling by the smart money into rising prices, which is your cause, the effect is no demand bars, lower volume, and a trend change. And if you can summarize this for yourself, this will help you tremendously. You won't have to constantly be reading every single dialog box. You don't have to constantly be checking and checking and checking. You can look, you can get a sense, you can read the overall picture, and then you can go in and sort of understand, what's going on here. But watch the volume. That's the #1 reason why the first letter of our methodology is V, volume spread analysis. It's because the volume really does show you everything, okay? Don't worry, Bill, this will be recorded. Great to have you here. Okay, so Steve, this is your turn to come in. So do you want me to unmute myself and you can come on in?
Okay, how's my sound, everyone? Everybody hear me okay? Good deal. Good afternoon, Steve and Sam. Well, Pedro, Keith, Edward, a lot of people here. Nice to see some familiar faces as well, or names. I see some people are in private chat with me still. Now that was a really good discussion on the distribution, and basically all we have to do is flip it over, completely turn it over here. Nice to see everybody. The cause and effect in the climactic action always starts the phase. Once you see that take place, there's a radar up, and if it starts to slap sideways, we'll watch for an accumulation phase, so we'll talk about that. So the cause is the climactic action. Then there's a campaign that's involved with an accumulation phase. You'll see testing, shakeouts, and then it'll rise back up on light volume, and get slammed back down. So they'll do a little trickery in that level, because there's trapped-in traders to the left. And what the effect is eventually they'll shake all the weak holders out and mop up all the orders, and the trend will change. So we have we'll have a nice area to pick along to move on to the next here. And we'll look at a good example here. So on A, here we have an S&P on the daily chart. And on A, I have stopping volume. We have a massive, there's 3 bars in a row here with massive volume to the left. Way over to the left on A. See the 1 bar down, the next bar looks like a massive shakeout. And then a penetrating bar with extra heavy volume, and the next bar finishes up. And it tells me that there's buyers have overcome down in the A area. If you look over to the right at 1229, it starts to float up on low volume. They slam it down and slam it down. So now we have a cause, a radar up. And over on B, it's a massive shakeout here. So you see they're playing games with it right in the middle here at 1120, 1100. they bring it up just a little and then rapidly bring it down again. And then some massive volume comes in, they mop it up some more. Well, the volume's a bit too heavy. Then it rises back up, and okay, there's too many sellers. We're going to slam them back down again. We have one final shakeout. If you look over to the right, relatively speaking, look how light the volume is. So there's an excellent sign of a reversal here. Now as it rises back up, here's where we have a little spread to the upside where it's a little effort to the left. We have a test, and it springs out of there. So an entry right above that test. You keep a stop below the low of the test, and it rides on up. And that's a pretty aggressive way to go. But there's the effect. So we have a massive accumulation from August to October. Play games with it, brings it up, trend changes, test, pops right back up. Now that we're at 1229, there's a little accumulation here trying to get some effort, and they pop it through again. 2 bars up, and they come back down, and here's a nice level of no supply, low volume down bar. The very next bar is a shakeout. They whip it down and mark it right back up. So the breakout of this no supply bar to the right, there's a bunch of energy with this shakeout now. No supply bar, okay, lack of selling, a bunch of buyers just came in. Now we have a lot of energy built up for this no supply. Pops up, right up to 1291 and a quarter, where there's a problem. More sellers come out. There's an effort to push through the 1291 level now. So now we have accumulation, the effect, the trend change. Now we have an effort to rise. They're trying to absorb the sellers over here, pesky sellers. The next day, it's getting capped with sellers. Massive volume, narrow spread. Every time buy orders come in, they keep hitting it and hitting it. The very next day, okay, well, sellers are still up there. We're going to slam them back down rapidly. Very next bar on G is a shakeout. Now it pops back up. Again, they withdraw at no demand. There's more lots of sellers. They know there's a lot of selling in this area. See this massive volume. They withdraw, slam them down again. Notice the next bar. It's a shakeout. It's lighter than the other shakeout, relatively speaking. So G and I, there's a lighter volume. So it's a shakeout on lighter volume, pushed back up, and then there was a test. So, and right now we're pushing right back down to those levels. So at point A, we had stopping volume.
Steve, you just have to click on the screen and it'll move forward.
Oh, it does. Okay. So recap. We have stopping volume here on A. Massive volume over 3 bars. The next bar here closes up. It's confirming the strength. Price then it dribbles off here, wanes. It's having a hard time, and then they slam it right back down. they're taken away from the high, bringing it back down, so they want to accumulate more back down in here. There's more to mop up. Trying to stay away from the cell orders up in here and make them sell down here. Getting rid of all the weak holders. So this is a key level. You see a shakeout here on lower volume on a double bottom like this. Then you go to C, and it's a really strong signal that this thing's probably going to pop. And as you see, it really never broke that low all the way across. So, D is another one in that energy in the shakeout, and just pop through. It's a nice little area here. Expect this whole area to get tested some more. Right down in there now. The effort to rise. So we have absorption. They're trying to absorb it. Too much selling. Now they're playing games with it down here again at the G and I level. Where's our napkin drawing? So that's a key level, something to really key in on. When you see climactic action in the background, always look for that shakeout. And if it does it on lighter volume, relatively speaking, then you have some pretty decent strength when it starts to take off. Of course, it needs to be confirmed by an up bar. And then we have a test, coming in later. So it moves up until point B, or it moves sideways, and then we have a massive shakeout there. The widespread bar closes on the high. And the next bar is closing up and confirms. See, it's went right back down to A. And the next bar is up. And as we said before, relatively speaking, sure it looks high when you're on it right there, but if you always look in the background, they're really mopping it up there. And now the testing begins. So we have our campaign. Really shake it out. This is the key. So as soon as you see that and the trend changes, good things are happening. So you have a low volume down bar. Closes off the low. Doesn't really slice down, and it's on low volume here. The very next bar pushes up. So we'll break above the high of the test and off to the races. And it does hit 1229, and if you do your homework in the background, you'll know that 1229 is a pretty key area to keep a good eye on. Weakness on smaller time frames if you're trying to run them. So it isn't an uptrend, but it's we have the top of the creek to really push through there. And number 2, or D here, the no supply. It's the actually best entry because it's above the creek. It does a little jump. It pushes back on low volume. And there's some nice testing right behind it. See how it jumped the creek here, came right back down. So this is the old resistance area. And now it becomes support. Nice nice little shakeout. That's the one that gives us all the energy to spray it up. So there's a couple ways to break it above the shakeout or break it above the no supply. Maybe even add to the position if you're in it. Yeah, good things there. So we have that effort to rise, and they're getting mopped up. They're trying to, there are blocks of orders up there. People holding on still. Getting out, oh boy, I get to get out of break even or small loss. They weren't able to mop up, there's too many sell orders. And the next bar really tells us that. They're really driving it up, and every time it goes up, it gets hammered with the sell order. And we'll reverse it back down, slam it back down, shake them loose. So we have the cause in the background. It's climactic action, so our radar's up. Okay, we've got climactic action into new lows, or lows that haven't been around for a long time. The next bar's up, and all of a sudden we've got low volume up bars, slamming back down, shakeouts, testing, low volume up bars, more widespread down bars, and then finally a shakeout with lower volume in the background. That tells you that the accumulation phase is pretty much accomplished. And then there's a cause, a series of tests back into the area, and then it jumps the creep, and then we have the effect, and that's the safest way to get in is once you see that take place, you have the effect of trend change. So we have accumulation, it goes up, tests a bit, and then pops over that accumulation phase. It's almost like a box in the background. Pops over that little room, bounces back to the floor on low volume, bounces right back up to the ceiling. And if it doesn't have enough energy to pop through the ceiling because there's too many sellers, it gets capped and they play games with it. So I hope that was helpful. Rick asked if where would you enter on the no supply bar? There would be two ways to go about it. You take the, well, what's confirming it actually is the shakeout right after, and that's creating the energy. So the top of the no supply bar, right in here, let's go back to D here. The question was, where would you enter on a no supply bar? Well, a break above the no supply would really be a confirmation of strength. But the next bar is a shakeout. So a break above the shakeout, oops, backwards now. A test above the breakout, or a push above that breakout would do it as well. So there's actually two places to do that. Okay, let's get back to D. Simply clicked on the chart. So the top of the no supply, but you have a confirmation there's a shakeout here now. So the top of the shakeout and the top of the no supply. There's really two places to enter. And if the one that's working at the top of the shakeout is still working, that's an excellent place to add to a winner if it pops through there. Because you have a lot of energy behind that no supply now with the shakeout. Yeah, exactly. Better risk reward on the shakeout part, for sure. How do you know when the accumulation phase has ended and markups begin? You see that effort to rise there? That started to mushroom over and then plow through. Look at the distribution part of the video. And I think that'll help too, Diane. William, there's all kinds of good software things out there. Let's see, any other questions that I may be missing here? Santi, does that make sense why there's a test on C now that we've covered it? Sure, Steve S. Write me some email. I'll shoot that off to you. Steve was wanting the PDF of that. So any other questions? Let me read back on some. Keith, did that make sense now that we've gone through the double bottom there? And when you're going to the second double bottom, that shakeout's relatively lower. Did that make sense? We go over it again.
Xavier, I'll give you that in just a minute. I'll show you my email address, and then if anyone wants the slides, they can get it. Thanks.
Good deal. The question was about the shakeout, and when we have that second double bottom, after the but the shakeout, if it's less volume than the previous low, relatively speaking, you know it's a pretty strong bottom there, especially when it's followed by up bars. And then as soon as it jumped that 29 level, we knew there was a good effect there. But going down, way down there, down near B would be, you'd be in the chop zone.
Steve was asking if there's any past webinars in this series available. They're mostly on YouTube, Steve, and my boss is actually uploading several of them to the VSA Club. So he created a new section called the ABCs of VSA, and my PowerPoint slides and the webinars should be in there, but he is working on the one-by-one, so they may not all be in there yet, but YouTube would be a good place to also look.
Okay, Jay asked, do you do any trading within the accumulation phase or sit on your hands? Based on your objective.
Well, I think, Jay, too, the other thing we were trying to say is the accumulation phase, or what I was talking about earlier, the distribution phase, you basically want to recognize what's going on and wait. Steve, do you mind if I take over the computer?
Sure.
You can freely talk and answer the questions, but I'm just going to...
Okay, or I can type them back to them as well.
Yeah.
Are you going to be talking away?
I was just going to move to the last part of the presentation.
Okay, good deal.
Okay. Okay. So, let's see. All right, so do you want to just talk about this last area, the key areas that you had recognized in your accumulation stage?
Sure, sure. I was going to be watching for testing and efforts to push through that 1291 and a quarter. And I'll be on guard for any type of upthrust into the rising market and no demands. We saw a bit of a narrow spread and a massive volume right before it pushed up. So things of that nature I'll be on guard for, and I'll be looking for tests within that 1229 level because they're shaking them loose. So there's a bit of a campaign right above the creek on the daily chart, but I'll be on guard for failed tests just in case. So tests have to be successful today. So basically we're caught in a minor accumulation phase right above the major accumulation phase.
And in your experience, does that happen quite a bit?
Yeah, they like to jump it right above and pull it back and test it out some more. You stair steps on up. So you get a major one, and then a minor one, and another minor one, and eventually it exhausts itself and rolls over. It's like the first part of the presentation. Yeah, it ebbs and flows. It's the beautiful thing about the market.
Simon asks, should a test always finish near the low of the bar on low volume? Simon, oftentimes a test has a little bit of a tail at the end, so it can close in the middle or somewhere towards the low. The key about a test is two things. Number one, it needs to be an up bar, and number two, you want the next bar after it to close lower. The third characteristic of a test as well is it most of the time, 99% of the time, a good test is not going to break the close of the bar behind it. It's going to fall within the body of the bar behind it, even though it's an up bar. I hope that helps. And Steve, do you want to answer Bill's question about jumping the creek? Because that's obviously a your.
Oh yeah, jumping the creek. That's a Richard Wyckoff analysis, and when you have an accumulation phase. It creates that box. It's the accumulation phase right here. Creates that box. Well, the top is the creek, and every time it comes up, it hits its head on the creek and pulls back, hits its head, pulls back, and then gains some energy and finally jumps over the creek. And the idea is it pulls back down. When it tests, it's coming back down and drinking some water. And getting some energy to try to push back up. So that's the analogy, jumping the creek. And on the reverse side, it falling through the ice. It's a Richard Wyckoff term, volume spread analysis.
For our do you want to show the chart again for the people that are eagerly asking us for it again? Do you want to identify your creek?
Yeah, the 1229.75 is the top of the accumulation phase here. So as soon as it jumped up in here, we jumped the creek. This line here is where they come back down and they're taking a drag. And it can penetrate a little lower. It's a bit of a zone. See all the bottoms here. So these lines here are where we're at in the accumulation phase on the second, a minor accumulation phase. Yeah, back for a drink.
Also, let me just point out, Simon, your question. So here's why this is a perfect example of a test. One, has a little bit of a tail. Two, it doesn't break the close of this bar. And three, the next bar closes up. So that's actually a really good test. It's also lower volume. So it's essentially testing to see how much supply is left in the market before they bring the price up.
The test is right before the creek there. And that's a good sign that it's going to challenge there. That's what you might be thinking of there, Barry? What about the other creek? You drew it at 1291. That would be the test you're referring to. And I see the top 1291. What that is, it's more like the ice. And that's where everybody got trapped long. So. Does that make sense, Barry?
You're talking about bar E, Steve, right, where it tries to break through the ice but fails?
Yeah, 1291. Yeah. I was got it now. So see how it broke through the background? That's resistance now, and that's why I put that up there. So the 1229 is the creek. 1291 would be the ice way over on the left where it broke through. That's distribution. Over here, falls down. Now, every time it comes up, it's hitting its head on the ice. That's the distribution term. And when it comes back, distribution. And when it comes back up and breaks the accumulation, this is a creek right here. And the reason I drew this is because that's where they got trapped in. The longs got trapped in down here. Does that make sense? Yeah, there you go.
Barry says, okay, is that normal to play on the ice after the spring thaw and jumping the creek? So I suppose if you want to, you could.
Yeah, it's Richard Wyckoff like the outdoors.
Okay. Just going to bring it to the end. Did you have anything that you wanted to add, Steve, before I just sort of move it to the final part of the presentation?
I think it was pretty clear. The questions that are coming in, it sounds like
yeah, it's good.
Well,
Yeah, exactly. And Santi just asked about what do I mean by the tail on the test. All I mean is that there's something below the close. There's like a little bit of a tail. Essentially, a test shouldn't close on the absolute bottom of the bar. See, even here, there's a teeny-weeny test, a teeny-weeny tail. The shakeout, there's all of this tail left. Basically, what's left of the bar below the close. The tail is really a Tom Williams term, but it sort of gives me a really good visual in my head. So here's the conclusion. Okay. Understand the cause, which is either the accumulation or distribution phase by the smart money, or the campaign, if you will. You're looking for anomalies of supply and demand to alert you to a new cause, which is essentially the climactic action. So that big widespread, ultra-high volume, that's an anomaly. And that's going to help you enter a trade when that supply dries up. You look for no demands or tests, depending on which market you're in, as your key indicators for a trend reversal. Okay? So here is our Thanksgiving offer. It's my cornucopia. We are basically offering an educational offer. It's the Chart Reading Masterclass or the European Symposium, and you can get those for $399.95, or you can own both for $599.95. And the first 30 orders will get the month of December free in Steve's room. And all you have to do is go to my page on the website. It's just tradeguider.com/Lauren. The Chart Reading Masterclass is an excellent learning module. It takes the 16 principles of VSA, one module at a time, or one principle at a time, and it uses an audio-video format, and it has PDF printouts. The European Symposium is basically a tape-recorded, 2-day, ongoing discussion and analysis of VSA with Tom Williams, Sebastian Manby, Philip Friston, Gavin. There's a lot of people in that, and the analysis and the identification of signals and supply and demand are top-notch. It's excellent, excellent. I think, Steve, you said that's how you learned VSA, isn't it?
Yeah. Yeah, learned all that. I've been a trade guider customer when Gavin was the vice president. So, yeah, I've been learning for a long time. Learned the symposium, and a lot of the, they actually had a chart come out on a daily basis as well that I learned a lot from. My Master of the Markets book is almost in shreds because I've made so many notes.
Well, we'll have to send you a new one then. So that's the offer, guys. It'll be good through next week. We did this in lieu of the fact that ABCs of VSA will not be hosted next week. I will be in Boston making pies with my mother and my sister for the big Thanksgiving feast the next day. I think we're having 35 of our closest family members for dinner. So to those of you that celebrate Thanksgiving, I want to wish you a happy Thanksgiving. And this, again, will be up until next week. Okay. Actually, Diane, we make apple pie. We make, yeah, Steve, go Pats, yay! We make, let's see, what else do we make? Pumpkin pie, squash pie. I always make a banana cream pie for my dad. And then we'll probably do like some sort of cake too. So, okay. And go ahead, Steve. What were you going to say?
Yeah, anybody that really studies those courses and jumps in the room will have a real good understanding of what I'm looking at and my overall view of the market. And I've put a nice structure together based on all this education here. And I've got some really solid trade structures, setups that I have to patiently wait for them, but when I do, they work out pretty nicely.
Well, I also like, too, from a beginner learning your room, I came in with the book and the chart reading masterclass. I just started the European Symposium bit by bit over the last couple of weeks. And being in your room and looking at those support and resistance levels has really helped me, too. So I guess I'm your best testimonial.
Yeah. A lot of good feedback there.
Okay. So if you want a free copy of Gavin's book, The Complete VSA Sequences Explained, it's very helpful. It gives you 10 signs of weakness, 10 signs of strength, and it shows you these sequences, or one after another after another. And basically things like the upthrust, the no demand, the test, the shakeout, all of those things you will see, and I recommend printing it out. You're absolutely welcome to have it for free, as well as the slides from this presentation. I also have Steve's PDF on, he had emailed it to me ahead of time, so I can include that as well if you want it separate from the presentation. And you can get that at my email right here. Okay. And this is how to reach me: phone, toll-free, email, Skype. And then this is the purchase page, okay, for the offer. So again, it's just tradeguider.com/Lauren. Okay, hope you all have a wonderful holiday next week. I will see you in 2 weeks. And Steve, I want to thank you very much for joining me today. You were a super duper co-host.
It was a pleasure. Yeah, I love this stuff. I could talk about it forever. Appreciate all the happy Thanksgivings, and I hope everybody has a great evening. We'll see all the regulars in the room. I'll be opening it up here real soon.
Okay, sounds great. Thanks, Steve. Thanks, guys. Good night.
Talk to you soon.